Another day, another story. Introduction. Hello and welcome to this video where we will be conducting a fundamental analysis of ICICI Bank stock. ICICI Bank is one of the leading private sector banks in India, with a market capitalization of over $75 billion. In this video, we will take a closer look at the bank's financials, key performance indicators, and industry trends to assess the bank's growth potential and investment opportunities. Financials. To start off, let's take a look at ICICI Bank's financials. According to the latest quarterly report, the bank's net interest income, NI, increased by 8.7% year to Rs. 10,314 crore, while its net profit for the quarter increased by 16% year to Rs. 5,498 crore. The bank's gross non-performing assets (GNPA) ratio stood at 3.47% as of December 2021, which is slightly higher than the industry average. However, the bank's provision coverage ratio (PCR) stood at 78.7%, which is better than the industry average. Overall, ICICI Bank's financials suggest that the bank is growing at a moderate pace and is well prepared to manage its risks. Key performance indicators. Moving on to key performance indicators, ICICI Bank's net interest margin, NIM, stood at 3.89% as of December 2021, which is slightly higher than the industry average. The bank's return on assets, ROA, and return on equity, ROE, stood at 1.3% and 15.8%, respectively, which are both higher than the industry average. These indicators suggest that ICICI Bank is delivering strong returns to its shareholders and is effectively managing its assets and liabilities. Industry trends. Finally, let's take a look at some industry trends that could impact ICICI Bank's future growth prospects. Firstly, the Indian banking sector is expected to benefit from the government's push towards a cashless economy, which is likely to increase demand for banking services. Secondly, the Reserve Bank of India has announced a series of measures to promote digital payments and reduce transaction costs, which could further boost ICICI Bank's fee income. However, the Indian banking sector faces stiff competition from both domestic and foreign players, which could put pressure on ICICI Bank's market share. Conclusion. To sum up, ICICI Bank is a well-managed bank with a strong financial track record and healthy key performance indicators. The bank is well positioned to capitalize on the government's push towards a cashless economy and is likely to benefit from the RBI's initiatives to promote digital payments. However, the bank faces competition from both domestic and foreign players, which is a risk to its market share. Overall, ICICI Bank presents a solid investment opportunity for long-term investors who are looking for exposure to the Indian banking sector. That's it for this video. I hope you found this fundamental analysis of ICICI Bank's stock informative and useful. Thank you for watching, and if you have any questions or comments, please feel free to leave them below.